Hi, my name is Dr. Sonali Garg. All right. Now, today what we'll be looking at, we'll look at the impact on an economy when there are tax cuts for the middle class and the tax cuts for the super rich, right? So what happens is, suppose there's a tax cut given to a middle income family, right? So let's say that they have a tax cut of 10,000. Let's say the total impact is $10,000 per year. Let's say that's the amount of tax cut that they get. Okay. Now, very often what governments do is, the governments are trying to look to stimulate the economy, right? To increase the demand for goods and services in the economy. So what happens is when the government gives a tax cut, of course, it helps, the citizens of the country, the ones who get the cut, but the government is also looking for a multiplied impact. So the family that gets it will benefit, but the government is hoping actually, especially when the economy is facing inadequate total demand in the economy, what we call aggregate demand. When let's say the economy is on a downturn, so what happens is the government wishes to stimulate the economy. One way to do that is to cut taxes. Now let's see the impact. Okay, so middle class family gets a $10,000 tax cut. They will spend probably 90% of it, maybe 60, 70% of it. I mean, they might put away the rest, 40 or 30 or 20 or 10% into savings. Okay. They might even invest that. But what they will do is upfront, they are more likely to spend it than, let's say, a $10,000 tax cut to somebody like Elon Musk. Okay. Let's say Mr. Elon Musk gets a tax cut of $10,000. Okay. He will probably not change his spending pattern at all. Maybe even a tax cut of, let's say, $1 million for him, given his net worth and how much, income he gets from whatever sources, his spending will not change. All right. But either way, let's compare a $10,000 tax cut. All right. So what happens is when you give a $10,000 tax cut to, John Doe, let's say, versus to Mr. Elon Musk, the John Doe, let's say John Doe is from a middle class family, family income is, somewhere in the middle of the, average, family incomes in the US, then John Doe is more likely to spend this. They're spending a larger percentage of this tax cut and hence creating more aggregate demand in the economy. It will stimulate the economy. Now, Mr. Elon Musk, when he gets a tax cut, or any of the other super rich in America, when they get a tax cut, they will save this money. It is highly unlikely that they will increase their spending based on a $10,000 tax cut, right? Or even, as I said, $1 million tax cut. But how they can stimulate the economy is if the money that they have received as a tax cut, if they invest it. So if they invest it, that will also benefit the economy equally, right? So that is that. The middle class income family will go out and spend it, a large percentage of it, and whatever they save, if they also invest it and stimulate the economy, and Mr. Elon Musk, or other super rich people in the economy, when they get a tax cut, the probability of their actually spending it is very low. They will save it, and then if they invest it, it will help the economy. So.